All right, today we're going to try and make sense of something that's, well, pretty confusing. What's going on with the electric vehicle maker NIO? Because on one hand, it feels like they just got this huge validation for their entire business model. But on the other, a key piece of data just popped up that could be a really serious warning sign. So what is actually happening here?
Okay, so here's how we're going to break this all down. We'll start with that huge endorsement I mentioned. Then we'll look at that kind of ominous sign that has people worried. From there, we'll try to figure out if we're looking at a production boom or a demand bust, check out what NIO has planned next, and finally, we'll try to tackle this great disconnect between the company itself and its stock price.
All right, first up, that big win. And what's kind of wild here is that this huge piece of good news isn't really about NIO at all, but it has massive implications for their whole strategy. And it all boils down to one central idea.
And that core concept is something called Battery as a Service, or BAAS for short. The whole idea is pretty simple. You buy the car, but you rent the battery. This makes the car cheaper up front, and you never have to worry about the battery getting old. You can just swap it for a fresh one. I mean, this has been NIO's whole thing right from the start.
And this is the big validation I was talking about. We're seeing Toyota, one of the biggest, most traditional car companies on the planet, and they're now launching EVs in the massive Indian market using a BAAS model. I mean, wow. That just goes to show you that NIO was really onto something big here. It's proof that for a lot of people, renting the battery is the way to go. It's a huge vote of confidence.
Okay, but here's where the story takes a turn. Right when it feels like the whole world is finally getting on board with NIO's big idea, this kind of concerning number starts making the rounds. It seems simple, but it's sparking a ton of debate.
And yeah, this is where things get a little tricky. Take a look at these customer wait times for NIO's flagship, the ES8. Think about it. Back in December, you were waiting almost half a year for one of these. Then, just last week, it was down to 15 weeks. And now, it's dropped again to like 13 or 14 weeks. In just a few months, the wait time has been chopped in half. So the big question is, why the heck is that happening?
Right. So this is the million-dollar question, isn't it? What does this actually mean? Because you can look at this shrinking wait time in two totally different ways. It's either really good news or really bad news.
Now, if you're looking at this with a glass half full perspective, this is fantastic news. The argument here is simple. NIO has just gotten incredibly good at making cars. They've ramped up production, they've figured out their battery supply issues, and now they're just a well-oiled machine pumping out cars and getting them to customers way faster than before. It's a sign of a company that's really maturing.
But if you put on your skeptic's hat, you see a completely different and, frankly, a much scarier picture. The worry is that wait times are dropping for a simple reason. Fewer people are ordering the car. Maybe that initial buzz from the launch a few months back is just fading. And that would mean demand is starting to dry up, a much more worrying thought.
So, okay, let's say there is a real risk of demand cooling off. What's the plan? What's NIO going to do about it? Well, it turns out they've got a few things in the pipeline to try and get people excited again.
It looks like they have this multi-stage plan to get the momentum back. So first, you can probably expect a bunch of new limited editions to create some quick buzz. Then, coming up in May, they're launching their high-end ES9. But really, the big one, the one everyone's watching, seems to be the brand new version of the ES7 that's set for the third quarter. And yeah, this new ES7 is absolutely crucial for them. See, the old model, it was kind of their worst performer, mainly because it just felt old and outdated. This new one, it's the total opposite. It's built on their latest and greatest NT 3.0 tech platform. So it gets all the new software, the bigger screens, the whole shebang. And the best part is, it's going to be a lot more affordable. So, how affordable are we talking? Well, the rumor is it could start around 350,000 RMB, which is about 48,000 US dollars. To put that in perspective for you, the previous big model, the ES8, started at almost double that. So this is a huge price drop, and it puts the new ES7 smack dab in the middle of a super competitive part of the EV market.
And that price point means it's going head-to-head with the undisputed champ of that segment, the Tesla Model Y. But check this out, NIO isn't coming to this fight empty-handed. They've got their brand new tech platform, and of course, that key differentiator, the option for battery as a service. That's something Tesla just doesn't do. It's a real shot across the bow.
And all of this leads us to the final piece of the puzzle. And honestly, it's the most confusing part of this whole story. Because while it seems like NIO is doing everything right from a business perspective, the financial markets, well, they're telling a completely different tale. And you can see this disconnect so clearly right here. You've got NIO's own CEO saying the company has climbed out of the valley and is now climbing up the mountain, basically saying the worst is behind them. But then you look at the stock chart and it looks like it's still sliding down into the valley. It's a total contradiction.
Let me put it another way, just to show you how stark this is. You look at things like their production, their technology, their lineup of cars. By almost any of those measures, NIO is a fundamentally stronger company today than it was back in 2021. But in 2021, the stock was trading at over $60 a share. Today, it's struggling to stay in the single digits. I mean, it's just a wild disconnect.
So that leaves us with the big question, right? What are we supposed to make of all this? Is the market just getting it wrong, creating this huge temporary opportunity? Or are those falling wait times and that plunging stock price actually a warning sign, the canary in the coal mine, telling us that despite all the good news, there are much deeper problems ahead for NIO?